Welcome back. Foreign investment into Mexico booming this year as some companies turn their backs on Asia. U.S. Treasury Secretary Janet Yellen visiting Mexico today, saying further collaboration between the U.S. and that country will benefit both economies. Frank Holland live now in Monterrey with more. Hi, Frank.
Hey there, Tyler. You know, Mexico is estimated to have $30 billion in greenfield foreign direct investment this year as part of that nearshoring boom. That's money from outside the country to build new manufacturing and other facilities. So we actually visited Lego just a short time ago. It's one of the companies investing in Mexico and really leaning in with plans to double production at their site here, with every single block made going directly into the U.S. Tesla, Foxconn, and Unilever, they're just some of the companies that are moving production or expanding production in Mexico this year. The 19% tariffs on Chinese goods and supply chain reliability, they're both key factors for the supply chain shift.
In every sector, we're having these discussions around reshuffling the total supply chain and making sure that it is de-risked. And because what we're talking about here is it's not only a cost topic, it's a de-risking of supply chains with everything we learned over the past period.
Another factor is making nearshoring attractive is less expensive labor. So estimates vary, but according to new data from Alex Partners, workers on average make $6.50 an hour in China compared to $4.82 an hour in Mexico. However, we spoke with several manufacturers here in the Monterrey, Mexico area. They say some of that advantage being lessened by the Mexican government announcing a 20% increase to the minimum wage for 2024. Tyler, back over to you.
How much do they think that would affect their competitiveness? I mean, I assume they're very worried about that.
You know, certainly worried about that, but right now the bigger issue is the rise in the peso compared to the dollar. The peso's risen double digits compared to the dollar over the last year. So, of course, that makes imports from Mexico a bit more expensive. I spoke to one contract manufacturer. He said there is a sweet spot where the peso isn't completely devalued, making their inputs more expensive, but it also doesn't make the things that they send out too expensive. They're really trying to find the balance. Right now, they're not trying so hard to compete when it comes to cost. It's really about reliability of the supply chain. But, you know, the manufacturers we spoke with, they certainly hope to see some softening in the peso over the next year.
All right, Frank Holland, thanks very much. Monterrey, Mexico. We appreciate it.
Thank you.